right, 1 hour time limit on that video. Part 2. Okay, so again, approaching the petty cash over and short. How much did you use? In this case, we use 60. How much should we find when we look in the petty cash box now? 90 should be remaining. Step 3, check the petty cash box. Look at the cash. And this time we find 91. So we should find 90, but we find 91. That means we are over or short? Over. It's very clear now. If we are over, we will not debit cash over and short, but we will credit cash over and short because it's over. Over / short by $1. Okay? Because if we're over, that's in essence a revenue. And a revenue is a natural credit. So cash over will be credited for $1. That means when we have to replenish with our cash account, our bank account, we only need to replenish 59. You see? We are relieved $1 because we found $1 extra. Maybe we didn't give back all the change to the individual we were dealing with, or the custodian miscounted somehow, or dropped one of their tips in there. Maybe they got a tip, who knows? Maybe some extra change otherwise fell in there. Either way, we have $1 extra. It's considered revenue in essence, and that's why it's credited for the $1, therefore only needing to replenish 59 in this case. That's how you use the cash over and short in a petty cash context. Okay, rewind that if needed. Cash over and short, just like petty cash, is a new account. It's also an account. And where exactly you put it, we know that we put petty cash in the asset section of the balance sheet. Where do you put cash over and short? If it's cash short, we said it's in essence an expense. That means it will be a miscellaneous expense on the, where do expenses go? Which statement? Income statement. If it's short, it will be a miscellaneous expense on the income statement. If it's over, it will be a miscellaneous revenue on the income statement. Right. So in this case, it's over, $1 credit, put it as a miscellaneous revenue on that same income statement. There you go. Cash over and short, petty cash, new accounts. Here's how to use them in the journal entries. That's what they mean. Hopefully that method that I gave you, the 3-step method on determining cash over and short, is helpful. Rewind this if needed. Now, we go to the change fund. Let's talk about the change fund very briefly. Oh, actually, this will be a third new account. Okay, and a change fund is for the pool sharks in the class, right? You go to a pub, you go to a bar, you go to a restaurant that has a pool table, and they might have a change fund that is strictly dedicated to make change for you, to turn your paper money into change. And that amount gets established via the same main cash account. In other words, where do we get that change fund? From cash. Just like petty cash is created from cash, the change fund is created from cash as well. And that's why on April 1st, you can debit change fund, which is an account, for $50. And that's literally change. It doesn't have to be just coins. It could just be smaller denominations of the paper bills, right? Depending on the type of business. But change fund is the debit here. Change fund is an asset. It gets debited. It's in the asset section of the balance sheet. And how is it created? Where did it get its funding from, so to speak? Cash. That's why cash is the credit for the same 50. Establish CF, change fund. That's it. Establish change fund. Now you know what it's for. Now you know how to journalize it. You journalize it the same way you journalize the establishing of the petty cash fund. Okay, now we talk about sales. And when you are starting a till, some of you may have worked in retail, and you are a cashier, knowing that you're opening and closing the till. If there's a change fund, then that change fund gets put in at the beginning of the shift and removed at the end of the shift, so that it is not included in the sales total. So if you're calculating your daily sales amount, and this is part of internal control, we're depositing our daily sales into our bank account at the end of each day. But before you deposit it into the bank account, you have to tally up how much sales you made in that day with your sales receipts. And you don't want the change fund to be included as part of that sales calculation, right? You want the sales receipts to be separate from your change fund total. That's why you need to take it out before you determine the sales receipts. So be careful with some of the questions, whether they are practice questions, assignment questions, test questions. Be careful with the language in the question. It might say that the change fund is already included in the sales total. So now you know that you're going to have to remove it before you determine what the sales total is, and before you determine what the cash over and short is. Because now cash over and short is also applied to the sales conversation. Okay. So let's erase this, because now we're talking about sales. And we have cash receipts that we got from the sales, and we have cash, and then we have sales receipts, which verify why we received that cash. And we need both of those to equal. The cash that we have needs to equal the total of the sales receipts. You work at a retail shop and you open up the till at 8 a.m., you close the till at 6 p.m. It's a long shift. You have a pool table in the back. You put the change fund in at 8 a.m. You go about your business. People come in. You make a lot of sales. You have sales receipts. You give the customer a copy of the sales receipt. You keep a copy of the sales receipt for the store records. And you collect the cash that they give you for the transaction. Now comes 6 p.m. Before you calculate how much cash is there and how much sales receipts total, you will take out that change fund that you put in at 8 a.m. Take it out before you make the calculations of sales receipts and cash, because you don't want to count the change fund as part of your sales. It will overstate the income statement. It will overstate net income, right? Take it out. Now add up all of the sales receipts. They total 2,000. Sales receipts 2,000. Cash also totals 2,000. So great. We now can journalize it. We are part of tying it back to internal controls. We are depositing it right into the account, that $2,000. And everything's great. We have the same amount of cash as our cash receipts. There's nothing mismatched. And we took out the change fund. Now, since we deposited it at the end of that day, we will journalize it. How do you journalize that? Just like we've been doing all semester long, cash will be our debit for 2,000, 2K. Sales will be the credit, 2K. That's simple, right? Record sales for the day. As the brief explanation. Recording sales for the day, this amount has been deposited via check to our bank account, and therefore it's a deposit in transit if it's still in the same, within the point, within the month, then the bank will also know about it and therefore everything will match. But if it's crossing over between 2 months and in the middle point we are actually doing that bank reconciliation, that's where we will have to also add that deposit in transit to the bank side, because again, we're doing both sides to make sure they balance. But that's how we're tying this into that bank reconciliation conversation. The sales for the day get deposited into the bank via a check, and that's why it's a deposit in transit. And here everything's great, it balances. But let's suppose we find the receipts, and again, we've assumed we've taken the change fund out. We get the receipts, it also equals 2,000. Or it equals 2,000. But we check the cash now, and it only equals 1990. 1990. Okay, so we'll just erase these amounts. $1,990. Our sales receipts, similar to our vouchers, we say, okay, 2,000. That means we should find 2,000 cash, very, very logically. But we actually find 1,990. That means we are short by 10. And if we're short, do we debit it or credit it? Debit it, because it's a natural debit. It's in essence an expense. So you have to record how much you factually found of cash. How much was it? 1990. That's the actual amount of cash that you found. That's what you have to record. Now cash over and short, I'll say O/S, all right, you got it, debited for 10. And then sales will be recorded at what you actually tabulated the sales receipts to be, the 2,000. You see? And then this $10 cash over and short will be considered a miscellaneous expense on that income statement. Cash over and short treated the same way in this entry, in these sales entries as it is in the replenishing petty cash entries. All right. Now we'll erase the cash over and short and these two amounts, and let's say the opposite now. We add up our sales receipts for the day. They add up to 1990. And then we say, well, we should find 1990 cash when we look into the till. But we add up the cash and we actually have 2,000. So we have $10 over. So first record what you actually found of cash, 2,000. Which side? Hey, what's up? Not at all. Thank you. Both of them are locked? You got them both full? Yeah. Yeah, okay. Okay, so now we're over. Sales credited for 1990, cash debited for 10. Which side is going to need that extra 10? The credit side. We know that when cash over and short is over, it's credited. So, cash O/S for 10. And now, that cash over and short is considered a miscellaneous revenue to be put on the income statement. Right? Miscellaneous revenue, why would that occur? Maybe we just didn't give back all the change that we were supposed to. Some customer got shortchanged. Right? The opposite occurs if we have not enough. Maybe the customer didn't give us enough to make the payment, but we still processed it. Whatever the error is, the way to balance the entry is by using this cash over and short. And that's why it's a versatile account. It does not have a natural balance. It can be a debit, it can be a credit, depending on what we need. Whether that's when we record the sales for the day or when we record the replenishing of the petty cash. All right, let me just see what else we have here, if anything. I think that's pretty comprehensive for chapter 8. Okay, hopefully you got that. Hopefully you got those concepts, you got those techniques on how to do the bank reconciliation, right? Remember, ask who knows about it first. Does our company know about it first, or does the bank know about it first? Then you know which side to add it or deduct it from, depending on what it is. With the petty cash, add up the vouchers first. Ask yourself, how much should I find in the box? Then check the box in step 3 in our... This is a step 3 that I'm offering you. You won't necessarily find it in the textbook, right? This is not a formal step 3 process, or 3-step process, but it is helpful because it helps you to be very clear on what should be in there and then determining whether you're over or short, right? So you check that box. If it's not what you expect, then you just compare what you found to what you expected and then record if it's over or short. With the sales, same thing. Before you determine the sales receipts and the cash that you should find in the till, make sure you take out the change fund, which is only designated to make change for customers. It's not part of our revenue. It's not part of our sales. All right, so exam now will be coming up. If you have any questions about that review I posted, please let me know. If you have any questions that you'd like to take up, please let me know that as well. I can do a video, I can do maybe in the discussion board, explain it. But go over the test, go over the assignments, go over the practice questions, and you'll be fine. It is long, it is a long exam, but that's what an exam is for, right? It has to include all chapters. Long, but manageable, though. These questions are not, they're all individually manageable, right? But when you add up all of the questions, then it seems like a lot. But each of them doesn't take that long individually, so you'll be fine. If you need any help, if you have any questions about the exam format or about anything, let me know. It is 20% of your mark. Just like all of the tests were, it is equally weighted. Don't think that it's worth more. It's worth just as much as the 3 tests are worth. And I'll help you out in this next week and a half or so, if you need it. Other than that, April 13th, 9 a.m., classroom still to be determined, location still to be determined. I will update you on that if I find that out. Okay, email me, discussion board if needed. Otherwise, enjoy the videos and the rest of the study. Okay.